What an amazing way to start the morning. What's going on, guys? It's Ricky with TechBud Solutions here with a super quick market update, and markets are pretty volatile. One moment, again, we were at highs during the pre-market session, and then we start making lower highs and lower lows. We open up in the red. We have a V-shaped recovery into the green for another retracement. Same support being tested, 605 on QQQ. I want to point that out. And now another V-shaped recovery back to retest previous highs. Today is a very favorable day for people that like to scalp. They like to get in, get out, open up short, cover, open up long, take profits. If that is not you, be careful. Just be aware of how the current market is trading, right? Specific market conditions are more favorable or less favorable depending on what you prefer. If you are someone that prefers when the market is either a consistent decline or consistent incline, so you can understand, do I want to go long or do I want to go short? I respect that. Maybe a day like today isn't a day where you want to take a very large position or where you want to take a position at all. Now, the answer or the question you might be having is, why is there so much volatility right now? Very simple. They just got an update right now according to the Fed rate monitor tool and all these different probability tools. Let me make sure that that is very well understood. This is not a guarantee. It's just an assumption. There is a 63% probability that the Federal Reserve is going to pause in the next rate cut or the next rate decision. So in 3 weeks, as many of you guys know, the Fed is supposed to come together and decide, hey, should we be cutting interest rates, pausing, or increasing interest rates? And the market was interpreting that, hey, the Federal Reserve and Jerome Powell, who's the head of the Federal Reserve, was going to be aggressive with these rate cuts. That's what the market wanted. The market wants more rate cuts because when rates are lower and when rates are being cut, it's cheaper for people like you and I and for businesses to borrow money. But cutting rates is inflationary. And as many of you guys know, inflation has been going up. But we also haven't received recent CPI reports. And Jerome Powell in the last meeting made it very clear. He gave the analogy of like driving in the fog. If you can't see, you slow down. And that's exactly what he said when it came down to the December meeting. If they are not getting government data to support a rate cut, they cannot assume that inflation is not rising, and they cannot assume that the labor market is getting weaker. There are two mandates: job stability and inflation. So as of right now, the market is interpreting that, hey, we actually got ahead of ourselves. And that's why markets were de-risking. They were pulling on back because now they are no longer factoring in a December rate cut as of right now. That's not to say that it can't change. I'm just explaining to you why we are seeing this change. And that is because, again, of what we now understand. I love trading in days like this. I love trading overbought reversals, and because of these setups, it's made it, in my opinion, easier to open up short on specific stocks that pump up. I open up short and I make money when it sells off. And if you want to, then again, it comes to retest previous support. If we get confirmation of a reversal, just like we talk about in the LPP lesson library, there's 3 stages of a reversal. When that thing ends up recovering, then you're able to go long if you want to. I do want to remind you, trading more does not yield a greater amount of return because, again, if it doesn't actually meet your criteria and you're not actually being selective, you're one bad trade away from giving back all the money that you made. Again, I'm just here to remind you to be careful in a market full of greed. Now, the other thing that I quickly wanted to share with you guys is, of course, this week, Wednesday, after the market closes, Nvidia is supposed to report earnings. This is huge. The market is waiting, anticipating for Nvidia, the most valuable company that's publicly traded, to report earnings. Make sure it's on your schedule because regardless if you're invested in Nvidia or not, it will move the market based off of how Nvidia reacts. So again, a quick little heads up. I'm going to have to... I'm sorry, I'm allergic to Bitcoin. Just in, Bitcoin officially erases all year-to-date gains in 2025. Isn't that funny? They often say that, oh, Bitcoin is like a new version of gold. When markets go down, Bitcoin goes up. I have yet to see one time that markets ever drop that Bitcoin actually goes up. It's not like gold. Gold actually goes up when there's uncertainty in the market. Bitcoin is just a bunch of idiots coming together and saying that it has value, saying that it has utility. Again, nothing that does nothing is simply nothing. Yes, people can pay something for nothing. That's the best way that we could explain what crypto is. I love the comparison of like, oh my God, the US dollar has lost 10% of its value within 2025. Dude, this coin went from 127 and is now trading at 97, 93 or 95. I don't even know where it's at right now. It's lost over 25% of its value in just the past few months. It's like why ever compare this to anything else when all it is a pump and dump? And people love to compare it when it's at all-time highs, but never like to talk about it when it loses 50 to 80%. Everything is easier in hindsight. Again, it's never a good idea to buy speculative companies or speculative assets at all-time highs, because we all know that, again, they are just one bad news away from giving back all that they gained. And the other thing that I wanted to share with you guys is I love this. I'm so happy to see people are finally calling out Michael Saylor for his Ponzi loop. So MSTR's entire business model is a fraud. Saylor and I will both be speaking at Binance Blockchain Week in Dubai in early December. I challenge Saylor to debate this proposition with me. Regardless of what happens to Bitcoin, I believe that MicroStrategy will eventually go bankrupt. Let's go. Again, proving that MicroStrategy is not a true business. It's simply Michael Saylor's way to be able to orchestrate him being able to borrow against his investors at a very cheap rate while you are left holding the bag. Very simple. If you like Bitcoin, although I don't, buy the actual asset itself. Why would you ever buy MSTR that borrows against your shares and simply dilutes you? There's a reason MicroStrategy is doing so terrible recently. Let me pull it up for you guys if you guys don't believe it. Michael Saylor or MicroStrategy has been an absolute joke lately. Oh, I can't even pull it up. It's also down today as well. And we can see just in the past few months, it's down over 55%. From highs of $453 all the way to lows of $197. Remember when everyone was hyping it up when it was at 400? Yet we made it very clear of like, hey, it's easy to talk when markets are bullish. Let's talk when markets begin to downturn. And this is nothing. Markets as a NASDAQ are still at all-time highs. Think about what happens when NASDAQ begins to enter a downturn. If that actually ends up happening, how do you think MicroStrategy will perform then? Very excited to follow up. Again, if you're a beginner, if you actually want to focus on risk, if you actually want to trade quality and selective setups, then that's what we do with our LPP team. It's a one-time payment for lifetime access. You'll get to watch me trade live every single day, and it's the second link in the description down below. Like today, we traded a specific setup. It was an overbought reversal on Oklo. And again, you can sign up today, rewatch today's live stream, and start watching live every day moving forward. I appreciate you guys' time. I hope that we're into thumbs up. And like always, let's make sure that we end the year on a green note. Take care, team.